Actually, I think the market has undergone significant changes recently, and we've underestimated it. I believe we've underestimated the impact of unprecedented changes and market turmoil. It's easy to fall into an optimistic or pessimistic mindset. It's one or the other. So what are we doing? We're answering mandatory questions, single choice questions, or making binary choices. I don't think so. Personally, I'm feeling optimistic right now. It's like the sleeper effect, where you see a glimmer of light. Why is that? This is the first point. If you look at economic indicators and leading indicators right now, our rate of decline is extremely fast, almost like free fall. So, with the socioeconomic system paying a huge price, the question is, how long can we pay this price? If you studied economics, you should know about margin. In layman's terms, when things reach an extreme, the reverse means things turn around. Given the price we're paying and the overall regression of society, for such a large economy, for an economy of this scale, it's simply impossible to allow a free fall. The economy is just too big. So sometimes, the situation really is stronger than the individual. Fortunately, since you are an economist, we can actually estimate how much of a safety margin and risk tolerance we have. When it comes to this kind of free fall, we have to consider how much room is left for monetary policy to be loosened, how much strength fiscal policy still has, and now even the central government is taking on local debt to resolve it. The third aspect is how much industrial capacity we still have, how strong the debt capacity of our household sector is, how quickly our per capita disposable income can improve, and what the actual room is for marginal improvement. This can almost be explained using a model, and I think it can be made very clear. Maybe this could be a proposal for a Chinese version of the Nobel Prize in economics, right? We're explaining the problems that a large, downward trending economy might face. What can provide support? How do we find the bottom? And how can we rebound from the bottom to achieve a V-shaped recovery? We can't always be in an L shape, with that L constantly trending downward, unable to find the horizontal part. We're just in free fall along the vertical. So when can we finally ride out that horizontal line? Will it be like Japan? 30 years of lost balance? But Japan did manage to maintain fiscal discipline, stabilizing such a large GDP and keeping per capita income at a high level. Can we achieve that? Do we have that strength? This is difficult. Our per capita level is not enough. 12,800, crossing the threshold for high-income countries. But that's only 1/7 or 1/8 of the US, 1/5 of Japan, and not half of South Korea. Compared to Hong Kong, Macau, and Taiwan, we're behind, and the gap is several times over. This difference is significant. That's the first point. The second point is about our flexibility and resilience. When analyzing China's economy, so-called economists and market participants usually like to analyze using quantitative lines. They don't look into the quality behind those numbers. In other words, when we explain economic resilience and flexibility, it's always tied to quantity. How much money we can print, how much debt we can take on, how much debt swapped, how much debt spent, how much GDP grows, what the CPI and PPI are, these all quantitative tools. But in reality, what matters are qualitative tools. The greatest dividends, flexibility and resilience, lie in the most important factor between potential growth rate and total factor productivity, institutional dividends. China has reached a point today where, if you notice, no one is discussing this. I think in all industries, economists, when they talk about these issues, we're all discussing the phenomena. But as soon as we get into policy analysis and recommendations, the quality of everyone's input rapidly declines. The marginal effect is inevitable. And why is that? Because you can't speak out? Because you can't touch on the real issue, institutional reform. What's hard about discussing institutional and systemic reform? Institutional reform is about unleashing productive forces, reforming production relations. It's about ensuring people's peace and happiness, stable and high-quality social development. These are all correct proposals from the party and state, so we must make changes. But how should we change? Is there determination to change? Will reforms go deep enough, be thorough enough, and address root issues? This includes deep reforms in fiscal and taxation systems, especially regarding fiscal policy and value-added tax. As Chinese society transitions from production-oriented to consumption-oriented, value-added tax is a major factor. During the previous tax sharing reform and China's rapid economic growth, value-added tax played a very important role. But today, if you want to boost domestic demand and create an environment where the domestic economic cycle is the main driver, mutually promoting and developing alongside the international cycle, then we must acknowledge that Chinese society must transition from a production-oriented society to a consumption-oriented one.